Hey there, ho there. Glad to have you here. It's Walter here, and you're here at the Naked Trading webinar. Um, Thanks so much for spending time here. Really appreciate it. So, we're going to talk about naked trading today, and one of the big uh, things, or one of the probably more famous patterns for naked trading, price action trading, is the pin bar or the kangaroo tail, as I wrote about in the book Naked Forex, which is actually like a subset, I suppose, of the pin bar. And Doji candles as well would be even like include a larger group. And what we're going to do is we're going to talk about all three of them. We're going to talk about all three. We're going to talk about the optimizers, things you need to pay attention to, reasons why I suppose one particular pin bar might look good to someone or may not look good to someone else who's a kangaroo tail trader, why dojis are misunderstood, and so forth. Okay, so let's get into it. First of all, let me just explain a little bit about the kangaroo tail. So the kangaroo tail was not my invention, and I wrote about it in Naked Forex, but the first time I ever saw it was from a guy by the name of Alexander Elder. Dr. Elder wrote a book called Come Into My Trading Room. And on one of those pages, there was like a box, a little side box in the book where he talked about the kangaroo tail. And he showed the pattern. I thought, wow, that's amazing. I never had seen anything quite as simple as that before. And so I tested that strategy actually. That pattern that he didn't really say much about it. He just kind of showed an example. And he said, don't put your stop loss all the way, on the other side of the tail, which is not what I did. I decided to put my stop loss on the other side of the tail. And I actually found what I consider to be an optimal kangaroo tail. And that's what I wrote about in the book Naked Forex. I can't remember what chapter it is. But what's cool about this strategy is it's actually been well received in the trading world, and it's actually known as a pin bar. Now, a pin bar is different than a kangaroo tail, and a pin bar is, interestingly enough, I think it was Martin Pring who, in his book, I can't remember which one, I think it was Pring on Price Action, where he talks about pin bars. It might have been a different one, but I think it was Pring on Price Action. He's written a few excellent trading books, and his take was the pin bar. And actually, that's kind of the term that's dominated now among me and my trading buddies. We all look at kangaroo tails, but I can understand why people would use the term pin bar, because it's a little bit of a similar thing. It's not quite the same though, as I see it. And that's because I have specific characteristics that I'm looking for in a kangaroo tail. And then finally, there's the doji, which is kind of the traditional. It's a traditional sort of. I guess really a pin bar would be, or a kangaroo tail would be, an evening star or a morning star, right? I think that's right. And so a doji would be a little bit different because of the close and the opener pretty much in the middle. Now, let's talk about, hey, Adam, great to have you here. Hey, guys. Everyone's showing up. Awesome. You guys, if you guys want to look at any charts, let me know. I'm happy to look at some charts later on at the end of our session today. So bring your questions about the live charts. Let me show you a kangaroo tail that I took yesterday. In fact, it was about a day ago. In fact, it was about a day ago from, let's see if it was, in fact, 12 2-hour candles ago. Yes. No, 13. So a little bit more than a day ago. So about 23 hours ago I took it. 25 hours ago I took it, not 24. Anyway, so I like to enter my trades during the European session. That's typically when I like to get in my trades. And what I did was I took this trade right here. And let me explain why I did. I'm glad actually that I had one yesterday, because we can talk about it. We can talk about this trade. This is the Euro-Yen 2-hour chart. So each of these candles represents 120 minutes. You can see down here at the bottom, we have a brand new candle that's going to close in 110 minutes. So it's only been going for 10 minutes. Now, the candle that I decided to take here was this candle right here. Okay. Now, the way that I saw this, actually, let me move this stop loss over for you. I'll move the stop loss over here. I'll move the entry price over here as well. And you can see my target is down here as well. Okay, so let me just put it, we're trading from the far left edge of the chart here. Far right edge, sorry. Left edge would be nice. So what was going on here was I had established a couple of different things. Number one, I use my open position ratios, and we'll talk about those probably in another webinar. You can go and watch other videos on this, on the open position ratios and how I use them. But I'll just say the open position ratios for the euro yen were basically 50-50. It was like 56-44 long and short. So basically there was no bias, and I didn't have any reason to suspect anything. But what it looked like to me, what I saw when I looked at this chart was I saw a level here of resistance and support and support. And I thought it was going to become resistance again because the market had printed this kangaroo tail right up against it right here. All right. So, and not only that, it was kind of like the, typically if I put let me put the period separator here so you can see that this candle 2, 4, 6, 8, 10. So this candle printed after 10 hours. So essentially the interbank period and the Asian session, and then this printed. Now I love to trade against the Asian move. The Asian move on the euro yen was up. So what do I want to do? I want to sell this bad boy. And that is precisely what I did. Hey, Albert, good to see you here. So I said, look, it went up. I've got really no clear bias, bullish or bearish. So I expected it to come back down here to these lows. And I said, you know what? It has actually made lower highs. Boom, boom, boom. So there is the potential that this is, kind of got a little bit more bearish bias than bullish. But I really wanted to eke out as much profit as I could from a move just to 120.14 down here, because that's where I thought it would be most likely to bounce and go back up. Again, because the open position ratios and the chart both suggested that it's not really trending at all. I held out hope, of course, that it would maybe fall through the floor, but I didn't expect it. So instead of just taking, and you'll notice here, now typically what I'll do, so this was a little bit of a different trade for me because I was trying to squeeze out 3R out of the move. Now you're all familiar with the idea of R. R is just the amount at risk. So if you're risking, $2,000 on a trade and you make 3R on the trade, that's a $6,000 trade. If you're risking, 50 pips on a trade and you make 3R on the trade, that's 150 pips on the trade. So I really like the idea of going for, at a very bare minimum, 2 point something R, more than 2R. But really my goal is to not take a trade unless I can try and get 3R out of it. So now typically what I would do is I would sell below this kangaroo tail, a few pips below, maybe down here at 45. And I put my stop loss up at the top there, which would be at 65, right? Now, the high of the candle was actually 63, but I had to add 2 pips because this is about a 1.5 to 2 pip spread. So if I'm selling, the problem with me selling down here at 45 and my stop loss at 65, that's 20 pips risk, obviously, those of you who are astute at mathematics. and I do not count myself among those. But if I'm risking 20 pips and I can only make 34, 35 pips, that's not 3R, is it? Unfortunately, that's not going to work. It's 1.75R or thereabouts. So that ain't going to work. So what I decided to do was I decided to use what's called a leg entry. Now, a leg entry is when we look for the market to go about as high of the retracement against the kangaroo tail as it did on the other side. So you can see here, it went up to 120.51 pips, right? So I said, okay, I'm going to get an entry at 120.50, okay? And so I'm going to wait for the next candle here to actually retrace and click me in. Now let me share with you what happened on the next candle. Boom, there it is. You'll see that it actually did make almost like a perfect leg here. So when I say it's a leg, if you're looking down from like the God point of view on a kangaroo, this would be the kangaroo's body. This would be one of his haunches. This would be the other one, and this would be his tail sticking out. He'd be looking down on his head, right? And the pouch right here is where the joey would be. If it's a lady kangaroo, or whatever you call that, a cow maybe, I don't know. Anyway, so that's basically what I wanted it to do, is retrace up there, and it did, and it clicked me in. Now the advantage, of course, of getting in at 50 is that now my risk is reduced to 15 pips. So by selling at 50 up here, right there, and putting my stop loss at 65, I've got 15 pips of risk to make my 14. Where is it? 14 is 37. So it's a 2.5 R on the trade, right? So I was trying to get as much as I could and get as close to 3 as I could. And it was about 2.5 R for a 120.14 target. All right, and 120.14 is basically where I have the floor over here. We had a touch here and a touch there. Okay, so that was the trade last night, and I'm actually still in the trade. I've got a trailing exit on, so half of the position cashed out on this candle. The other half I've got a trailing exit on, and hopefully, and it looks pretty good actually. This is what we would call a pinch trade. We're not really going to talk about pinches here today, but one of my students, Dennis, he actually coined the phrase, and I really love the way that he looks at these. And I love these trades. So this would actually be another a sell signal right here. But anyway, the point is that's a kangaroo tail. Okay, that's a kangaroo tail. Now this kangaroo tail has all of the characteristics of what kangaroo tails have, which is basically, number one, is it prints on a support and resistance zone. Number two, on a support and resistance zone, which it did. It just kissed it right there, right, where this yellow box is. Number two, it has an open and a close down near the bottom third for a bearish one. This is a bearish kangaroo tail, obviously. Open and close on bottom third. And then, yep. And then number three would be that the next candle, one of the next triggers within 2 candles. Okay. What I mean by that is that the market has to trade lower within the next 2 candles. It did actually during the very, very next candles. That worked as well. And really, ideally, we would have the kangaroo tail push into the zone. The more it pushes into the zone, the better. The only thing we want to be wary of is we don't want to actually close on the other side of the zone. So if the open and the close had actually gone on the other side of the zone, that would be actually probably a breakout and a retouch, and that would actually be more like a pinch right here. And you'll notice a lot of times traders, when they first start trading these, they get suckered into a lot of these where actually I don't know if we can see this, but let's see if we can find one here. I'll open up a 4-hour chart just because I want to do this, but this wasn't what I was planning on doing, but that's all right. So I'm going to open up a 4-hour chart here, and I'm going to go with the black and white template. Let's see here. No, we actually didn't. We actually didn't get it. I was hoping that this was a kangaroo tail right here, but that's all right. Forget it. That's not quite what I was hoping for. But anyway, so what happens is when you see it on, let's see if we can find one. When you see one of these on support, sometimes it goes beyond support, and that's kind of that's more of a retouch more than anything else. So it's actually a breakout and retouch. These are problematic. When you see kangaroo tails during a trend, they will often get obliterated, and that's a sign that you're in a strong trend. So it's like, hey,
Don't fight the trend, sort of thing. But one of the really big issues I see when traders are starting to trade these is knowing the difference between bouncing off of a zone and breaking through a zone, and that's where the close comes into line here. So here's an example of what I was talking about. Like the market's going down, making lower lows, lower highs. It prints a bullish kangaroo tail here. Let's assume that you think this is a zone. I don't see where it would be one necessarily, but let's say you think that's a zone there. Guess what? It just gets rocked, right? Market goes up and then back down, and then boom, you're stopped out right there. So when you see a lot of those, you know, okay, we're in a trend. Like here's another, let's see. Here's another one right here, but the open and the close were not inside the previous candle's range. That's another rule here. Well, forgot a rule. Don't want to forget that one. The open and the close is within the previous candle's range. So also they want to have space. So open and close within the previous candle's range, which it clearly is. The open here and the close are within this previous candle's range between the high and the low of the previous candle. If they don't fit that, we call them a pseudo kangaroo tail, and those can be good under certain circumstances. And then finally, you really want space. Now, this one had some space. It didn't have a whole lot of space, but remember, the market was actually going down. So this is what space is. How much of the candle prints on a unique area of the chart? And the answer is this much of the candle printed on a unique area of the chart, and this much of the candle. I'm going to make it gray. How about that? Or brown or something. Rosy brown. Whoops. I did the number. I meant to do the box. Anyway, you get the idea. I'm not going to mess with it. So this much of the candle, actually, I'll delete this zone here. That'll make it easier. See how this much of the candle actually printed at an area where we hadn't seen any price action. There's a void here. That's good. That means you might be on a swing point. It's when you trade these kangaroo tails like this one that doesn't have any space that you get into trouble. Because it doesn't have any space, there's wicks to the left here. That's like a one that doesn't fit because it doesn't really have rule number 5. It doesn't have space or room to the left. This one did. All right, so hopefully that makes sense. That's a kangaroo tail. Now, with the pin bar, these rules aren't part of the deal. With the pin bar, space, the open and the close rule between, inside the previous candle, triggering a sell stop or a buy stop within 2 candles, the bottom third and the top third thing, all of that stuff doesn't matter with the pin bar. I think what they're looking at here is just like candles like this. Like this would be a pin bar here, but that would not be a kangaroo tail. Why is this candle not a kangaroo tail? Why would this candle right here, I'm going to zoom in on it so you can see it. Why would this candle right here not qualify as a kangaroo tail? But I'm pretty sure that the pin bar traders would be happy to take this sell. Well, we don't know if it's on a zone. Let's just assume it's on a zone, though, and let's talk about other things. Like, let's just assume that we've drawn a zone right here. We said, look, lots of support here, and so it's on the zone. So that's not the rule. The reason why it's not is because the open and the close of this candle are not inside the previous candle's range. Why do we have that rule? Well, the reason why we have that rule is because when the market is run away and it's trending, you'll get a bunch of kangaroo tails, and they'll also completely blast you over and over again. This one has plenty of space, by the way. So if it's a runaway market, it's hard for the open and the close to print in the previous candle's range. That's why. And in this case, you can see the close here was at 120.98 and 7 pipettes, and the high is 120.97. So it did not make it, did not close within the previous candle's range. So that would be a pin bar. Dojis are, you know what we should do? What if we just start taking some trades? How about that? Who wants to do that? Party time. Yes, indeed. Let's do it. What I want to do is I want to fire up Forex Tester here. So that's what I'm going to do, and we will start testing these bad boys. Who wants to talk about yesterday's kangaroo tail when we can take some in Forex Tester? So Forex Tester is the old wait, which screen am I sharing here? Screen 2. Yes. Okay, cool. All right, here we go. Let's do it. All right, so what I want to do here is I want to flag. All right, so we have a 4-hour. I'm going to flag these with this bar so you can see them, right? This line here. So this would be this one right here. Actually, that's not going to work, is it? Okay. This one right here would be a pin bar, I suppose, but that wouldn't qualify as a kangaroo tail. It's got no space. I would actually draw the zone down here where these lows are. So ideally, it would be sitting down here, hanging down like that. It does go higher over the next candle, but this is not what I would call a viable kangaroo tail, right? Let's find some dojis. This could qualify as a doji. I think typically they're more like this right here. They don't usually have much of a body to the candle. I believe they can have a little bit of a body. I do believe, and I have to admit I haven't read any of those. I haven't read any of those Japanese candlestick books in probably 15 years. Was the last time I read one of those Japanese Secrets of the Orient sort of candlestick books. So I have no idea what they're saying today, nor do I care, to be quite honest. But I think they'd be like these, right? Anyway, here's the dirty little secret with those. I found those to be largely trend continuation patterns. So if I'm in a strong trend and I see one of these dojis, I actually consider them not to be reversals, but trend continuation, which I know is a weird thing. Because a lot of times you'll, at least again, back in 2003, 2004, when I was reading these books, they were talking about them as reversal points. Like you see the doji, that's it. That's the turning point. I'm sorry, friends. My testing hasn't shown that. Maybe you can find that. But for me, if the market's trending and I see a doji, I consider that to be a trend continuation pattern most of the time. So I don't know. But anyway, so here we are on the euro, and I also have the pound yen. Pound yen. Let's see if we can find any on the pound yen here. Here's one right here. One of the things also I want to point out is that I don't like taking. Here's one right here. Open and close are not in the previous candle's range, so that doesn't qualify. This one, there's your doji looking thing, and the market just goes up a bit and then continues and falls on down. Here's another pin bar, but it's got no space, so the market trucks higher. So what we could do here, if you want, is we could probably go with the old. Let's go to the euro and let's take some trades. Let's just do that. I think sometimes the easiest way to do this is to just find some trades and look at them. So this would not qualify as a kangaroo tail. Why? Because the open and the close are not inside the previous candle's range. You can quite clearly see that the close here is outside the previous candle's range. This would be a bullish one, assuming you're on support here, which I think you could certainly squint your eyes and make the case that this, the market reversed here or retraced here and then it bounced there. So you could say, yeah, I'm on support, but that would not qualify as a kangaroo tail for me. So let's keep going here. This one also, the open and the close are not in the top third. But party on. Okay, this one's interesting. This, we have the open and the close inside the previous candle's range. Open and the close in the top third. The market's falling down. I would, however, have a problem Actually, no. No. This actually would be on support, given the support back here. So I would go buy stop right here, right? Now, I'm not trading with the trend here. I am simply deciding to trade this bounce here. So I go buy stop right here, stop loss down there. So I got 73 pips of risk. So my take profit is going to be 219. We'll call it 225 to be just safe. I like to have a little bit more. Actually, it didn't qualify, did it? Because look, it took 2 candles and it didn't take my trade, so I shouldn't have taken that trade. That's my mistake. All right, so I shouldn't have taken that trade for sure. All right, let's keep going then. Next trade. I like my zones to be dashed lines. If I can get this right. Come on, friend. All right, it's not going to do it. All right, then. We'll make do with what we have. All right, so this is not a kangaroo tail. The open and close are not inside the previous candle's range, right? So no dice. No dice. Not going to happen. But this would be a pin bar, I suppose. And the market hasn't traded lower, but if you just got in on the close there, you would have been in for a bit of a drawdown. And then you've been in a little bit of profit now, and then you get stopped out right there, assuming your stop loss is on the other side. So that would have been a pin bar, right? Okay, let's keep. Oh, looks like we're in an uptrend. So this is where I would start to look for. That's not a kangaroo tail, right? I'd look for, but that could be considered a doji, trend continuation. I'd look for trendy kangaroo tails at this stage, which is kind of like what this one is. I don't like this one because it's really small. I like my kangaroo tails to have long tails. But if you added these 2 candles together, you'd have a kangaroo tail for sure. It would not be within the previous candle's range, though. The open and the close would not be within the previous candle's range. Maybe we're not in an uptrend. I thought we were. There is a kangaroo tail right there, right? Quite interesting, that one. Would you say that you have resistance here? I would not. I would say it's here and possibly here, but not where we are right now. I would say we missed the boat on that one. So no. Nope. All right, so we're still on this uptrend, I suppose. Looks pretty good. Pretty good. And nothing. And something. Now this, is that open and close within the previous candle's range? No. Boy, it just misses it, doesn't it? This is an interesting one because the market's going up. And if you're not on a really clear zone, I wouldn't sell into this uptrend. I would prefer to get a bounce off one of these support levels and actually buy, or just get a consolidation and have a trending. So a consolidation, a flat consolidation of 5 to 6 candles, 4 to 9 candles, and then boom, you go long. So I wouldn't do this one. It did go lower though, didn't it? Quite a bit. Probably not enough to give you 3R though, I would say. So there you have it. All right, let's see if we can find something good. Hey, an uptrend. We like it. Any dojis happening here? That would have been a pin bar right there. Did you see that one, guys? That would have been a pin bar right there because no open and close inside the previous candle's range, so it's not a kangaroo tail, but it certainly would have been a pin bar. Yeah. More okay, so this is your old doji, right? So when I see this, it's at resistance here, and people are thinking sell. I'm thinking this is probably just a pause, and especially with all these candles up here, I would call this really likely to break higher. That's what I would say. I would say I don't think this is going to hold, especially the longer it sits here, the more likely it's going to. And there you go, you get a break. So this is what I see when I see these dojis. I see, oh yes, trend continuation. There's another one. So I don't get too excited about those dojis in terms of reversals. And I know everyone loves. I've surveyed thousands of traders around the world. They've done a questionnaire for me, and most traders like to find the turning points. They don't like to go with the trend. They like to find the end of the trend. So I know that these sorts of patterns are popular with traders. Very popular. Here we go. Hey, now we're talking. So this would be a trendy kangaroo tail. Now, this is one of my favorite ways. This is exactly what I was talking about earlier. Okay, so does everyone see what's going on here? Can I zoom in more? Yes. So you've got the market making higher highs and higher lows. It paused for 1, 2, 3, 4, 5, 6 4-hour candles, and then it did this. Now we've got some space. There's no candles from here all the way to here, which is, you're always going to need to be a little bit more, you got to be okay with a little bit of space when you're in a trend. When you're finding a reversal kangaroo tail, you want to see a whole bunch of space. But when it's a trendy kangaroo tail, you're only going to have a little bit because the candles are going to be to the left by definition because you're going up or you're going down. So when you're trading a trendy kangaroo tail, you get as much space as you can. And this is good. So I go buy stop right here. I put my stop loss down here at the tail. And so that's 83 pips. So 240, so 255. Okay? 255 is my target. That's 3R. And if it triggers on the next two candles, which it did on the very next candle, which is awesome, then we are good to go, friends. We'll see if we hit my target up there. It's way up there. When you're in a trend, you got a better chance. And then there's another one. Now, this is one I would not take because I like to see a few candles of consolidation. One candle, not so nice for me. I like to see several. You can see this one. No, you still wouldn't. No, you would have been stopped out right there. Actually, that was another one. I missed it. I really should have taken that one. That was another one. Consolidation on support, and it just rocketed up. I should have just taken one right here. I'm going to cheat. I think that the close is inside the previous candle. It might be right on it. But what's my stop loss at? 59. So we'll go 60 times 3. We'll go 185 pips. And we'll go bam. See what happens here. We should be trading the other pair too, shouldn't we? Why are we just trading the euro? We should be trading the pound yen too. Well, you can see here we've had several. In fact, we have one right now. So with the pound yen, we had one here. This was a reversal kangaroo tail, assuming it's on a zone there. You have a doji here, and the market didn't quite make it. Rolled over, came back up, gave you another kangaroo tail right here, a reversal one. And then it gives one right now. We could sell right here, put a stop loss up above the high, 72 pips. So 210, 216, 220. How about that? 220, my friend. And let's see. Oh yeah, awesome. Now we're cooking. We got a few trades here. Am I still in my I'm in both my trades here. First one out. Second one is not out. But my pound yen trade is still on. There's another possible sell signal there. Hey, what's going on with my euro? Something just happened. Stopped out on that other one. I mean, hindsight being what it was, maybe it was cool to, when you're up 2R, maybe move to break even. But that one was stopped out. And then what's going on with my pound yen over here? We're going to get it. Boom, got it. So there you have it. So that is is there any questions about this stuff? Anyone curious about trendy kangaroo tails or anything like that? Again, for me, pin bars are no go. I like to use all those rules that we talked about, the open and the close, the 1/3 thing here. I'll bring them up for you again on my live charts here. So these are the things that I like to see. On a zone, open and close in the bottom third or top third if you're looking at a bullish one. The sell stop or the buy step will trigger within 2 candles, or I just forget about the trade. Obviously, if the market goes to my stop loss level before it goes to my sell stop or my buy stop, that's also a reason to dump the trade. I should have mentioned that. That's my long-standing rule. And then space. Like it needs to have some space. And that's basically it. And that's how the kangaroo tail is really kind of a special subset of the pin bar. And it's very different to the pin bar in many ways. I mean, I know people that will trade pin bars just wherever willy-nilly. I don't do that. I really like to see them on support and resistance. Otherwise, I don't like to, if the market usually bounces there, then it prints a pattern that I can reliably say, you know what, it's a good pattern for a bounce, then that works. Here's an example right here. This is an interesting one. I didn't see this one before. Do you see this one right here? This is a bullish kangaroo tail. Almost kind of looks like a double bottom when you look at support here, support there, and then this. You know, if you're looking at this from this point of view, you'd be thinking, yeah, let's go. You know, market's been making some strong moves up. Maybe this is just a pullback and we're going to go here. Yeah, let's do it. And then interestingly enough, over the next 2 candles, it doesn't trigger. If I had left my order in for candle 3, I probably would have been triggered on a buy stop here. But that's why I use the 2 candle rule. I want some momentum. I want the market to, I'm saying, look, the market's going to turn around here. So if it doesn't turn around here, I'm possibly wrong, and I don't want to deal with it. And I would have been wrong here, getting triggered on this candle and then stopped out over here. Boom, you're done. So cool. All right. Any other? I mean, this really I'll say one more thing about this. Actually, we could do it in Forex Tester, but look, when you have these trend lines here, that like the market's going down and you have these little trend lines that are holding your retracement moves, like your bearish flags or your bullish flags, and then it's punctuated by a kangaroo tail. I love those trades. Some of my favorite, like this sort of trade where I know this wasn't really a trending market, but if the market's trending, let's pull up Forex Tester and see if we can find one. I'll show you exactly what I'm talking about. I'm just gonna go here until the market's trending. Okay, this is a trendy kangaroo tail here. You've got consolidation to the left. You got your candle. It actually would have been triggered right there, and it would have been stopped out. Wouldn't have done much for you. Okay, let's keep going here. What I want to do is find a trend. Maybe we'll go to the euro if the euro is trending. No, euro's not trending either. Potentially. Yeah, this is it. There it is. That's exactly what I was talking about. Okay, cool. We found one. So the market's making lower highs and lower lows. And then it does this, okay? This is what we call a bearish flag. Bearish flag is just a name for a retracement in a downtrend. When I see this happen on these, you can wait for the market to break the trend line and get in on a trade there, okay? However, and actually we just had one on I'll show you on the Euro Singapore. If you guys have any charts you want to see, let me know. Like if you have any live charts you want to see, let me know. I think it was the Euro Singapore last night. Actually, I saw this. It might have been the Euro Pound, but I think it was the Euro Singapore. No, it was not. This would like on a 4-hour chart. This would have been one right here on the Euro Pound. It was. I didn't actually get in a trade on the Euro Pound. I was trying to, but here's your bullish or your bearish flag. And if you add these 2 candles together, you get the really lovely kangaroo tail, right? So it's on the retracement, just like we had actually on the on the euro yen trade I took. So you see it like this, and the aggressive play here is to sell and to assume that it's going to break the trend line, like this, that it's going to go. Like that's the aggressive play here. No doubt about it, it's aggressive. And the thing is, when you use this sort of aggression, you always get the highest payoff, but you get the lowest win rate. And that's one of the principles of trading that we forget sometimes. You know, an entry with no confirmation or very little confirmation, very little reason to take the trade, that can be the most rewarding entry. But it also means you're probably going to get slapped a bunch of times before you finally hook into a good one. And that's just a trading principle. We have to, so you can decide, I'm going to be in late and get less R. My stop's going to be further away. So maybe I only get 2.5 R out of the trade, or I get in really early and I might be able to make 6 R out of the trade because my stop's so tight. So that's just like a trading principle. This was stopped out, but good news is it gave us another one. And I would actually say this other one is even better in some ways. So I would sell right here, put my stop loss up here. And we're looking at 95 times 3. We're going to call that 300 pips, my friends. Let's see what we got going on there. 300 pips will put it all the way down at the next zone. All right, there's my 2 candle rule. The market did not trigger my sell stop in 2 candles, so I go delete, right? And that's how it works. Delete. Yeah, okay. Do you have any current markets you guys want to see? There's a kangaroo tail there. There was one right here, but remember, it didn't. The open and close were not inside the previous candle's range. In this one, not only was it on a zone up here where we had resistance, but the open and the close were inside the previous candle's range. So that would have been a good one. It broke on the very next candle. Here's those kangaroo tails I talk about. You see in a trending market, you see them pop up, and they're just awful because. Oh, there's a good one. They give you a reason to. That was really nice because why? Because it had space, right? Do you see that? Had lots of space right there. All the way to here. Your reversal kangaroo tails need to have space like this one. That was a great one. Great reversal here and a great reversal here, actually. One thing again that I think we forget when we look at these one candle patterns is you need to look at the whole big picture. The fact that this one right here, let me share with you this one. This is not a good kangaroo tail to me. This is a bad one. This is a trap. Number one, if I look to the left here, I don't really have a zone drawn here. Okay, my zone is actually further higher up. So even if I move the zone down here and go, well, it's about here. We're not there yet. We're close, but we're not there yet. So that's number one. Number two, though, this is a sign of momentum. Big, huge, hairy candle like this says momentum and does not say, oh, it's the market's turning. No, this is not a market's turning sort of thing. This is a, get out of the way, So I would not trade this. And I don't know how much we saw here. But it just blasted right. Now, this is where you wanted to see the kangaroo tail. And what you really want to see is you want to start seeing wicky candles or small candles like we saw here before you get your signal. You want to see the momentum slow down. So a lot of traders will take these kangaroo tails at the top of these big bullish candles or big bearish candles at the bottom of the big bear. That's no good. I want to see the market rolling over and getting wicky. I don't want to take them at the top of a big giant there's another doji, right? Trend continuation again. Again, here's a beautiful looking kangaroo tail. I don't know if I can say it's on a zone. I can't actually. I don't have much history here to know, but I would say the zone was back here. So we're above the zone. And not only that, but it's on the top of this big bullish candle. I don't want to deal with that, right? No way. That's no fun. So I would not take that one either, and you're probably going to get stopped out, it looks like. No, maybe not. Yes, you're stopped out right there. Again, all the market did was it just pulled back to the support level, and then it bounced. Now, this is a little bit different. This kangaroo tail, again, no reason to take it. The big bullish candle here is what you're looking at. I know we've got little candles here, but you want to see them kind of rounding, making a top or a double top, not sitting at. This is actually a pattern that I trade. This right here, the big bullish candle followed by the little candle up at the top. This is what we call a lighthouse. I would buy here. This is a buy setup. So the fact that I have a kangaroo tail would not dissuade me from holding on to my lighthouse trade here. I would still be in the trade there, and I would be happy to ride it higher because it did go higher. so I would be more than happy to, and usually I put those bound around the midpoint of this candle. So that one would have had about 70 pips of risk or something like that, buying on the top of this. Anyway, that's it, guys. I think we're all plumb out of time, but I really thank you for spending time here with us. I wish you very happy trading. Hope to see you in another webinar. Stay naked out there. Of course, always test, and don't assume anything I say is true. Test for yourself dojis, pinbars, and kangaroo tails. But remember to keep in mind the entire picture, all of the candles around the one candle formation, because there's nothing magic about them. It's really, for me, the support and resistance plus the pattern plus the fact that the market, is kind of showing me what's going on, whether it's consolidation before a trendy kangaroo tail or sort of slowing down a momentum before a reversal. Either one. Okay? Thanks so much for your time here, guys. I wish you very happy trading, and we'll catch you in another webinar. Take care. See ya. Bye. Thanks, Andre. Have a good one.